There are four key reasons to take a closer look at Eastern and Southeastern Europe. Firstly, very attractive growth profile. Over the last 7 years, countries like Poland and Romania have grown at over 3.5 percentage points annualized GDP growth compared to, say, 2% in Latin America and over 5% in Asia ex-Japan. Looking forward, these countries are expected to grow over 3% over the coming 3 years. Again, in comparison with Latin America, expected to grow at 2%, and Asia ex-Japan growth slowing down to 4.5%. Secondly, stable politics. Greece had elections in 2023 that returned the center-right government that was in power, therefore providing economic policy continuity and regulatory stability. Poland also had elections towards the end of last year, and with the election of Donald Tusk, Poland has now returned to the mainstream of EU politics. This has led to the EU unblocking some of the EU development funds. You also have a situation where Romania is going into elections towards the end of this year. Again, there are expectations of continued stability in Romania after the elections. Thirdly, nearshoring. There are two key reasons why manufacturing activity in Eastern Europe in particular has picked up. Firstly, a nearshoring of production out of Western Europe, where cost of manufacturing had gone up significantly on account of inflation as well as much higher energy prices. Secondly, there's been a relocation of manufacturing closer to Europe out of Asia, in particular to supply to the electric vehicle supply chain within Europe. Finally, there's been a very strong increase in EU funding post-COVID that is supporting a lot of infrastructure development and energy transition projects in places like Poland, Romania, and Greece. Those are the four key reasons why investors should take a closer look at Eastern Europe and Southeastern Europe. We like the region for the stable political setup, very strong institutional backing from EU, and the trends of nearshoring. But the one thing to be aware of is, given the proximity to Ukraine, we're always watchful of the developments there involving Russia and Ukraine, given how close these economies are to the flashpoint. But above and beyond that, we remain fairly comfortable with the backdrop for investments in the region. Two areas stand out as investment opportunities in those markets. Firstly, financials. On the back of very strong growth, the region has seen over the last few years and strong expected future growth in light of the EU funding coming through. We see very strong prospects for corporate loan growth. And the other thing that's happened in the region is that there's been a very strong real income growth on the back of higher wage growth and also moderating inflation. This is expected to boost demand for consumer loans as well as mortgages. Secondly, we also expect some consumer companies to have a very strong demand backed by the real wage growth we're seeing within the consumer space. The other thing that's helping some of these companies as well is the fact that they are moving out of their core Eastern European markets and expanding quite successfully into much larger Western European markets.